Hello and welcome. Yesterday, the European currency entered a strong correction ahead of today's Fed meeting. Notably, the US Central Bank is expected to raise its interest rate by 75 basis points to 2.5% in an effort to tackle high inflation. The regulator expects the inflation rate to move back to its 2% target. However, in the meantime, consumer prices continue to surge despite the Fed's aggressive interest rate hikes. Apparently, much will depend on Federal Reserve officials and economists' focus for the end of this year. Their economic outlook will determine the further dynamics of the dollar, other risky assets, and the market situation as a whole. If the US Central Bank maintains its aggressive stance, demand for the greenback will continue to grow and stock indices will stay under pressure. In case the Fed favors a more cautious approach to monetary policy, the euro and the British pound will have a chance of recovering, especially given that both the European Central Bank and the Bank of England are moving towards monetary policy tightening. In my opinion, the euro and the pound sterling may well gain value following the Fed meeting, and its officials will hardly say anything new. As for other fundamental factors, yesterday's statistics failed to support the European currency, although US consumer confidence fell below expectations. Today's macroeconomic calendar is bereft of any important releases from the euro area. However, traders may take notice of Germany's consumer climate indicator, which is projected to decline, as well as US durable goods orders and goods trade balance. The focus of market participants will be on the third policy meeting. From a technical point of view, it's worth focusing on the first resistance level of 1.0171 and the 1.0125 mark, which acts as support. If the euro comes under stronger downward pressure following the Fed meeting, a false breakout at 1.0171 will create a sell signal. In this case, bears will strive to regain control of 1.0125. If the price fixes below this level and tested from the bottom up, the volume of short positions will increase. Thus, the euro will head towards 1.0082. If the price breaks through this mark, it may slide to 1.0045 and even tumble to parity. Long positions can be considered only amid a false breakout at 1.0125 or 1.0082 before the US Central Bank's policy setting meeting. Alternatively, if bulls are able to protect 1.0171 and the price tested from the top down, a buy signal will come and the European currency will rebound to 1.0220. Meanwhile, while the British pound is trading above 1.2035, there is a likelihood that the pair may gain upside momentum. A false breakout at this level will create a strong buy signal which will push the pound sterling above the weekly high of 1.2087. If the price consolidates above this mark amid bear subdued trading activity, the pound-dollar pair will have a chance of climbing to 1.2119 and 1.2960. At the level of 1.2160, it will be possible to go short on the rebound with a view to catching an intraday correction of 25-30 pips. Short positions at 1.2119 and 1.2087 can be considered only in the event of a false breakout. If bears manage to take control of 1.2035, and the price tests this mark from the bottom up, short interest will raise. In this case, the British pound will head for 1.2001 and 1.1964. At the level of 1.1964, I recommend going long on a rebound, counting on an intraday correction of 25-30 pips. Long positions at 1.2001 can be opened only amid a false breakout. The next important level is at 1.1929. A descent to this mark will put at risk an uptrend initiated on July 14 since a breakout of 1.1964. The lower boundary of the ascending channel will increase pressure on the pound sterling. However, this may happen only after the US Federal Reserve meeting. Good luck.